They will earn more and more people will get employed. In the near future, we'll see more reinsurance players entering into the domestic market as well.
We are just in the beginning. I don't want to repeat, but I was talking about a Swiss Re report, and it's talking about how India is emerging as the fastest growing insurance market, and giving the 6 reasons behind. One of the reasons is the regulatory developments. So thanks to you, that's what's happening. In our private conversation, once I used that is a Panda Express, because you are so fast doing, and people got upset. No, he's not an express, he's a bullet train. So that's it. That's what I mean, you are playing a test match with the temperament of T20, but not the India team, which you got defeated by New Zealand recently, whitewash completely. Not that kind of thing, but in the right spirit. That's what I'm saying. So first thing I want to ask you, Panda sir, is this. When you talk about banking and capital markets. In banking, what happened since banking nationalization in 1969 and now, I think the last 10 years have been far more interesting, which gives a kind of real architecture of banking, the credit bureaus, UPI, everything. For capital markets, we have NSDL, CDSL and all. But for insurance, we don't see that kind of infrastructure as yet. It's primarily agency driven, that's it. I mean, is there any plan? We have been doing so many things for the real architecture. What can we expect from you?
Thank you for having me here this morning with a very august audience. And insurance certainly has to reach every household, has to touch every citizen, has to touch the enterprises. And that is for sure something we would all like to see that happen in our lifetime. And when we are talking of Viksit Bharat by 2047, it is definitely imperative that we need to have a fully insured society, a fully pensioned society, fully banked society. That goes without saying. Having said that, in the last couple of years that I have been assigned this responsibility, we have understood what is the system, what was the system that existed, and also looked at whether the regulatory system provides ample opportunity to what the policyholders or the prospects would expect. For IRDAI, the policyholders and the prospects remain at the core. And keeping them central, everything is focused towards policyholders first. We looked at the agility of the framework, we looked at the progressive nature of the framework, we looked at whether it is adaptable, whether it gives enough of flexibility, operational flexibility to the insurers, and similarly for the intermediaries. So that at the end of the day, what we are looking at is how insurance should be made, first and foremost, available, then accessible, affordable, and over and above, how do we build trust insurance as a product amongst our countrymen. That's the biggest challenge, the trust factor. Now, in order to do that, the first and foremost was to, completely revamp the regulatory system, looking at whether it provides for all the 4 components that I mentioned. So we did it through a multiple review by constituting several committees comprising of the stakeholders as well as the regulator, and found what are the gaps and what are the necessary ingredients that should be brought into that system to make it more agile, more adaptable, more progressive, more vibrant, more forward-looking, and to cater to the customer needs. In terms of, typically India, it's not a one-size-fits-all approach will be possible. What I can buy, my driver cannot afford to buy that, and what the others can buy, I cannot buy that. So you need to have products, multiple products for different income sizes, for different pocket sizes, for different, occupational categories, and so on and so forth. So, so the first and foremost was to revamp the regulatory architecture, which it is possible today. What has happened with a very progressive one, moving away from a rule-based to a principle-based approach, could happen, and I would give full credit to my team at IRDAI who took up this challenge and gave their 100% to create this framework today, which is actually evincing a lot of interest amongst international investors as well. Number two, nothing can happen without the help of technology. For a 1.4 billion population, you just can't physically reach out to each and everyone, no matter how hard you may try. You cannot bring in those efficiencies which are required into a system. So technology was something which was the topmost of our mind after the regulatory revamping or creating a new architecture. Then apart from technology, what you need is data and digitization. Typically, all of us understand very well the power of data in the insurance sector. When we talk of insurance affordability, we also talk of the law of large numbers, which is typically the suits to the insurance sector. Insurance sector is also different from the banking sector because banking sector looks at individual pricing or entity-wise pricing, but here it is pooling of the risks. So therefore, it becomes slightly different as far as the capital requirements are also concerned. So the pricing part, the reforms also has taken note of how do we make it affordable. Now, but we don't want to do the micromanagement. The market should determine the price. And typically, I believe in that philosophy very clearly that the regulator should not be getting into pricing. But what we have tried to do is build safeguards to protect the policyholders, and therefore all those multiple cap, segmental, sectoral limits, everything removed, but there is a limit on the overall expenses of management expenses at the company level, thereby allowing within that range, you decide what you need to remunerate to your distributors, what you need to spend on advertisement, what you need to spend on your management. Now, that's the first year, and now we are getting into the second year of that regime, and so we are also engaging with the the insurers to see where they stand. So, data. Going forward, you see, there will be more and more of personalized pricing possible. And with the millennial population, they will demand products which we call DIY, do it yourself. The millennial will say, I want a payout after 5 years, X amount. After 7 years, Y amount. After 10 years, Z amount. You tell me what is the premium that I'm supposed to pay to you. So these kind of personalized and hyper-personalized offerings, better risk pricing so that what you need to pay, I need not pay the same amount. Or what I need to pay, he need not pay the same amount. So that is the modern trend, and it has to go, and that will be possible with the help of data, digitization, and technology. Then the moment of truth comes, that is when the claims payment happen. And that is the challenge again. As one of the speakers said that we are not here to deny claims, but to pay claims. Now, how does that happen? How does that actually translate into being? So there are challenges. It's not that we are not, but what is that moment, as you said, for that the UPI and the credit bureaus did for the banking, the demat accounts and the CSDL, NSDL did for the markets. So here, the Bima Sugam, which I think you raised a question. The Bima Sugam is going to be a public digital infrastructure, keeping the policyholder at the core to offer an end-to-end journey of the life cycle of the product and even beyond. Buying, selling, payment, getting the policy both in a digitized form as well as a physical copy if he or she so desires, servicing requests, claim processing requests, and then the choice that he will get a product. Today, there is a limited choice of products available to the customers because obviously an agent or an intermediary will not be an agent to all the companies because there's some kind of architectural constraint also that you cannot go beyond the numbers of tie-ups. Uh, what is within our realm, we are trying to open it up in a gradual manner so that ultimately the policyholders or the prospect gets more and more choice. And I think typically, if you ask young people, they'll look at all the products that are available on the shelf. So the Bima Sugam will be the electronic marketplace where products of every company will be displayed on that marketplace, on that platform. So it will help customers exercising their choice. The distributors will benefit immensely because they are able to complete a transaction at a much lesser cost and price and in a much lesser time. So where they are able to sell one policy a day, they'll be able to sell 20 policies a day because they are going with the marketplace to the doorstep of the customer. So Bima Sugam will be the game changer, number one. Then the data analytics, advanced data analytics that we are trying to develop at the Insurance Information Bureau, which is also getting a new look and a revamped look, will help in providing all the analytical information, insights, and data for the insurance companies to do the personalized risk pricing. The third will be the data and the digitization. So data, digitization, and the Bima Sugam will be the game changer as far as insurance is concerned.
That's the new architecture. That's the new architecture for your inclusive growth, which, I mean, many of the things that you are doing now, which the banking system had seen probably early this century, this inclusive growth, that SLBC model which the banks follow, that you are following. It's a phenomenal work you are doing. And what you rightly said is this affordability, accessibility, availability, and trust. Now, talking about the data, one key question is this, and one in my interaction with the industry we find is there's this, that insurance is far more leverage business than banks. Banks, you're talking about normally maybe 10 times, maybe 7 times small finance bank, they are 15% capital adequacy ratio, etc. But here it's a 500 times. For a 416 rupee premium at PMJDY, one can get up to 2 lakh. So, but then we find that the insurance mortality table, it's 1 decade old. I'm sorry about saying this, you may not like, that Insurance Information Bureau also finding it's very difficult. My understanding is this, a very large player, I would not like to name that entity, is not cooperating because that particular entity probably thinking that why would I share the data to get to the industry will get the benefit. So it's not happening the way it should happen. Am I correct in saying this? Because data is the key for risk management in this hugely leveraged business. I'm through, sir.
Okay. So possibly, if I've heard you correctly, you have asked 3 questions. So to answer the first with regard to the leveraging, banking and insurance, I think I made an initial hint.
No, that's a context. That's not a question. Huh?
So typically, I would say that they are quite different from each other. Where I said there is a pooling of risk, whereas here it is an individual pricing. Moreover, insurance, we should all note that insurance pricing is calculated on a very scientific footing based on the actuarial principles. So there is a method and there is a science behind it which the pricing and the calculations are done. So therefore, it does take care of the risk part, and accordingly the pricing is made. But yes, going forward, if we have more data, then we'll be able to price it better. Now, the second aspect of I think you asked about the capital requirement with regard to JJBY or SBY. See, these are low-ticket items, and these low-ticket items have been priced just for the keeping in mind the affordability also. And secondly, also to initiate people who are new to insurance into insurance. The flagship programs have done an excellent job in terms of providing the security or the protection that was required. And I'm happy to share that I have gone through some of the testimonials and also the interaction which has been held at the highest level with the beneficiaries. People have used that money to pay off their debt because the breadwinner passed away. Part of the money that they got as insurance, they kept it for the education of the children. So even this 2 lakhs of rupees have come in very, very handy at critical times. And secondly, there is a built-in mechanism that every 3 years the price will be reviewed and it will be suitably priced. And that has happened, although after a little longer gap. Now, secondly, for more efficient utilization of capital, we are moving from the factor-based solvency to a risk-based solvency. Yeah. Work is in progress.
2028 FY, something like that?
We in fact, we are having a Bima Manthan only next week to work out all those details, because we are doing it in close consultations or collaboration with the industry, so that they also don't get, I mean, there's a major disruption. We want it a smooth transition, but to happen because it is in the larger interest of the ecosystem that the capital is utilized more efficiently. So that work is in progress, and hopefully 2025 we'll see that happening by the end of, before the end of 2025. Now, IIB is a sector's data repository, right? But we want it only not to be a repository, but go much beyond it in terms of, as I said, advanced analytics, insightful data sharing, information sharing, which will be utilized by the industry for pricing, for underwriting, for claim processing, for fraud prevention, etc., etc. A large number of tools have been developed. If I can name some of them, then, I mean, you would have seen that the Quest, the Prism, the Inkling, and so on and so forth, the Prowess, the Caution Repository, all of this is providing critical insights to the insurers. And if I'm not wrong, there is one tool where more than 300,000 cases of life insurance frauds have been, that could be avoided, and that could have led, that sum assured was more than 1 lakh crore of rupees. So, but having said that, we are trying to make it even more vibrant, more dynamic, and also, today the industry is very, very closely participating. All the life insurance companies are participating, all the general insurance, all the health insurance are participating. The flow of information for life, for the savings and annuity product is coming smoothly. Gradually, the other set of data is also going to flow. The systems are being built at the back end. Every company is getting integrated with the IIB through a unique API interface. There's a single point of contact today available with who will interact with the IIB. Periodic meetings are being taken both by the IRDAI as well as by the IIB themselves. The industry does understand the importance and the power that the IIB has in it, which will be helpful for the industry. So I'm pretty much sure that the IIB going forward will become a more robust and a more advanced data analytical center, which will help the industry in prevention of frauds and also facilitate them in pricing, underwriting, and other stuff. What was the third? I think 2 questions I have answered. Third one, kuch tha.
Okay. Now tell me, I'm this Bima Sugam, that will change the entire architecture of the distribution and all. So what happens to how would this 30 lakh odd agents, how would the insurance sector handle them? And one unique factor in insurance is this: in anywhere you see, in banking, a mutual fund, everywhere, the agent's commission is staggered over a period of time, it's amortized. But in insurance, continue to be upfront. And it sounds very, 30% odd. So on the beginning itself, first installment, this guy's pockets it. Can't it be in a different way, staggered thing, which happens in the banking and other places?
You see, you talked of the Bima Sugam, how it will help the distributors. So what does Bima Sugam do? It facilitates easy access to insurance for the consumers, and also it will enhance distribution opportunities. Today, we need perhaps 3 times the number of distributors that are there on the ground to cater to 1.4 billion. Now, how do you expect them to be more efficient? And I fully recognize that an agent or a foot soldier who is going to the market to buy or to sell insurance, obviously at the end of the day, he needs to have some income to feed his family. Now, The Bima Sugam, supposing I go to a customer, I go with one product, the customer doesn't buy, he says, sorry, I want a choice. Then I come back home empty-handed. With the Bima Sugam, I'm sure I will be able to sell one product, not one product within the same time frame. I may be able to sell to 10 other people also, because the transactions are everything happening online. The customer need not give a the ID requirement, because it gets auto-populated through the Aadhaar authentication. Because the Bima Sugam eventually is going to get connected to the India stack. So the KYC happens on the system itself. The payment happens through the UPI on the system itself. The underwriting machine of the concerned company, the product I am buying, works immediately to generate my policy. The policy comes to me as a customer to my mobile phone in the digitized form, and if I need a physical form, a physical copy, I can go and get a printout from the CSC or some other, wherever I wish to. So the distributors become much more efficient, and the remuneration would grow, the opportunities would grow, and therefore the remuneration structure will automatically even out in a manner that more and more people buy insurance, the base gets expanded, more agents get employed, and they sell more policies, they earn more.
No, but still
that is how it will work.
That means that I cannot access Bima Sugam on my own. It has to be through the agents.
It will be.
Will the Bima Sugam, that agents will carry Bima Sugam in his hand on his mobile and sells it to me. I cannot access it on my own.
You are carrying it in your mobile phone, you can carry it on your laptop, you can carry it on your tablet, or you can open the computer desk.
So then where do the agents come? How can, they're not there anymore, right?
Who?
The agents?
The agents will do it through their smartphone.
No, my question is very simple. If I am directly accessing it, why do I need the agents?
Still, you see, insurance is still a product. For example, a life insurance product. It's a complex product. You need to understand the features of that
So they
product.
the agents...
So you will still require assistance.
Okay, that's what I want.
So, and secondly, the suitability, the need, what is the income level, how periodically I have to make the payment, when will I get, all these questions will automatically not get answered. So I may still require an advisor to help me buy the right product which suits my pocket size.
So they are not on the streets, they will
certainly not. I am saying that they will earn more, and more people will get employed.
Okay. Talking about this, the productive use of capital, banks, if I am overloaded on the asset side, I can go and sell off, securitize and all. The equivalent of that in insurance should be reinsurance. But somehow in India, I don't see that reinsurance market the way it should have been. Is it IRDAI's focus now also to help the reinsurance market to grow?
We have also made a series of changes as far as the reinsurance regulations are concerned. And opening the door for more domestic reinsurers also to set up shops. We have got one application which is under process, a domestic reinsurer. We are looking at, the other big investors to also get into the reinsurance space, who are already in the primary insurance space. We are looking at cross-border reinsurers who are operating from their jurisdiction also to come to India, either become a FRB, that is a foreign reinsurer branch, or become a domestic investor, or set up a shop in Gift City so that our reinsurance capacity in the market grows. Insurers are also at their end. There's a typical year also to retain very little risk with them and give away more risk to the reinsurers. So that rationalization is also happening. But at the same time, creation of reinsurance capacity is definitely a priority. The new regulations is moving towards that. And hopefully, in the near future, we'll see more reinsurance players entering into the domestic market as well.
I'll come to the regulations part later, but before that, one question I'm asking you to tax related, not on GST. That's a lot discussed and all. So, insurance is a long-term product. And insurance is, the money is a key to, it's a cliche, but just say that our infrastructure building and all. For home loan, we get tax benefits. For pension fund, etc., national pension scheme, we get tax benefit. Why not IRDA push for something for this long-term insurance, some kind of tax benefit for the customers? Because at the end of the day, for the nation building, infrastructure building, that's the key. I mean, now it's, of course, from last year, it happened that up to 5 lakh, there is some kind of tax benefit is there. But for the long-term investment, like the national pension scheme, like home loans, shouldn't there be a tax benefit, you think?
No, I fully agree that if there is a tax concession, it definitely be more attractive. Having said that, you're right that in a long term will provide more financial stability, financial protection to the household. It will also contribute to the economic stability. All of that are well taken. But at the moment, also I think quite a bit of tax concessions are available, like Section 80C. Deduction for premiums paid in life insurance for up to 1.5 lakhs is available. Section 10D, where the maturity proceeds of life insurance policies are tax-free. Section 80D, deductions available for health insurance premiums, that is for encouraging health coverage. NPS, you have the, the eligible for tax deduction under CCD, and also reinforcing the promotion for long-term policy. So these are available.
That's all within the overall limit.
Correct.
There's no special
Beyond that, if something comes, then it will be most welcome.
Okay. PM, and a very simple thing, that PMJGY, now you only allow the banks to sell. Why can't others sell PMJGY?
See, the government is actively considering also opening up to the insurance companies. See, typically why the PMJGBY was suitable to banks, because of the convenience. Number one, the customer is a bank account holder, so no KYC required. Number two, there is already a customer established relationship with the policyholder. Third, there is an authorization through an auto debit mechanism that this money which is towards premium can be drawn from my account and the policy issued. So and of course, it is a low cost. The administrative costs are much lower if the bank does it, because everything is available with them. So with a very nominal amount, they could underwrite and issue those policies. So to begin with, that has happened and it has gained a lot of traction. Now the government is considering also opening up to the insurance companies. So we have also offered our comments. So hopefully that will happen.
That's in favor of them. Your comment is in favor of them. They are just rapt attention. They are listening. Okay. I have many more questions, but time is running out actually. But with your permission, with the of the house, you can continue for a few minutes. No question. Regulator, no question. Just you have to listen to him. That's all. Sir, you have any questions? Okay. You have any question? One or two. This gentleman raised the first one. Just one. Just give them thing, and then we'll get back. Very brief. Huh? And no grievance redressal. Just anything. Okay. Quickly.
Sir, my name is Sachin Deshpande, and this is a very important kind of a thing. This is regarding to the like children with special needs. Children with special needs. So parents with
children's need.
Special needs, basically. Special needs. So we are in touch with a lot of NGOs, and the parents are very much concerned. Is that they are actually helping the children with special needs, then they go to the... Okay. Is there any special kind of insurance schemes or anything which you can think about, which will probably help? Because it's a great... lot of NGOs are working towards that. But this is one thing which is suggestion and probably also... Thanks.
Special children, do you have any kind of...
if you look at the health insurance circular, which was issued just about a couple of months ago, there clearly, persons with disability, persons with mental health issues, special needs, even surrogacy, all of that now has been covered, which means every insurance company should provide those kind of covers for all ages, irrespective. If you live 100 years also old, then also, if I demand a cover, then the insurance companies are obliged to provide you with the cover. So kindly read that. It completely takes care of the entire ecosystem. Nobody is left out of the system. So that is what the new set of rules, and companies are adapting to those new standards, new changes. Even the turnaround times have also been now reduced significantly in the interest of the policyholders.
Thank you, Panda Sahab. Yeah, this gentleman, please. Very quick, introduce
Hi,
yourself
sir.
and short.
Kiran Belsekar here. So we have seen the vision of Viksit Bharat by 2047 for insurance for all. So quickly, so that is, I think the more of the insurance awareness is required. The way mutual fund MFI has done for mutual fund sahi hai. Mahesh has already given a tagline for insurance zaruri. I think we need more of awareness. Any plans around it from the regulator side?
Please.
Let me tell you that we are working along with the councils, the GI Council and LI Council, to come up with a long-term multimedia campaign. IRDAI, on our own, we are going to address the more thematic issues, whereas so there will be a synergy between the insurance councils and IRDAI. What we do, they did not repeat, and what they do, that may not be required also as far as we are concerned. So we are almost at the end of that journey of getting the empanelment done of the creative agencies and also the agencies who will actually launch those campaigns through multimedia, which is digital, electronic, print, television, social, everything. So you will soon, that will be unveiled. I don't want to say what will be the tagline and who will run the campaign, who will be the celebrity or stuff like that. But all of those are under works, and very soon you will see that campaign being launched. So that is something which is on the cards.
Thank you. Thank you. Two quick questions. It won't take much time to this thing. Both on the regulation and the entire industry and industry observers, all of us are waiting for. When do we see the composite insurance? Like one can have both life, general, and health, everything. That's on your table. How soon can we expect that?
You see, what we have, during the course of our review, during the course with our interaction with various stakeholders.
And is there any taker for that? Do you think too many
so,
takers? Because right now we have, in the banking segment, the banks have life insurance and general insurance completely separate.
So as per the statute currently, it recognizes 3 lines. One is the life, the non-life, and standalone health.
LIC, I think, is in talks to buy one
So
health
for
insurance.
composite insurance, there is a need for an amendment in the Act. In other words, if I have a composite insurance, then I can write all kinds of business, irrespective of whether it is life, non-life, or health.
Yes.
So that entails an amendment. And also to inform that the Government of India has also taken up some of the recommendations which we had made, and composite also is one of them. And as and when the Act gets amended, that should happen, and it should open the way for a composite license.
Other thing is this 100% FDI. That's also you have been pushing for, you have been talking about. When do we see that?
See, when we are talking of insurance for all by 2047, obviously we need a lot of capital. This is a capital-intensive sector. So we need a lot of capital, which means we need a lot of new entities to come in. There may be some consolidation also happening. So all of that churning will happen. And if FDI route is also opened, that will only augment to the domestic investment as well. Otherwise, the domestic investment may get crowded out. So we should perhaps it's time to open up for 100% FDI. So more players who want to come and operate on their own terms without trying to look for an Indian partner, that may also help. But if somebody comes with 74-26 or some other proportion, also it's fine. But opening it up to 100% will attract more investments to come into the country, is what I believe.
Thank you, Panda Sahab. We have almost come to the end. I have one, not a question, a request. And you can't say no to it. Okay? But before that, anything I have not asked, anything you want to convey to the industry? Not been asked for, anything you want to say? Then I'll come to my request.
No, I would only tell the industry and other stakeholders who are here, now look, with the new regulatory mechanism that has been provided now, where ease of doing business has been one of the major pillars. A reduced compliance burden is another major pillar which we have worked on. Third is also trying to create a more robust and resilient and an enhanced risk management framework to the risk-based capital regime, through the risk-based supervision framework, and through the IFRS, alignment with the IFRS, is going to actually provide whatever you are looking for. And therefore, now you must go to the hinterland. You must come up with a number of products depending on the requirement of the different states, different regions, different geographies. You should cater to their requirements. You should adopt technology in a big way. When we say technology, you have to put the cyber security measures in place, which IRDAI has been, guiding from time to time. You have to remain in close contact with the certain also if an incident happens. You have to reduce the vulnerabilities. You have to carry out periodic audits. All of them are mentioned. Then the last but not the least is the claims experience of the customers has to be a delightful journey. That is something you need to focus on. So these are the few things that I would like to tell the industry.
That's the message from the regulator. Those who do not know, as a Principal Secretary of Uttar Pradesh, Panda Saab actually changed the entire emergency management. I think that one number, that UP 112, that was the police emergency management system that used to, and there are many more Indian states adopted that. So you are known for innovations. What I call is this, under you, just 2 years, what till that time before you came, what was in insurance industry, that was the periodika, and now we are seeing glasnost. So be it inclusion, be it from rule-based to principle-based product processes, everything you are changing. So thank you. Give him a big hand, and a request on behalf of everybody, those who do not know, Panda sir also a good singer. So today I want you to have little bit. Choice is yours. Kishore Kumar or Mukesh, Mohammad Rafi and Kishore Kumar. These are two favorite. Your two favorite. So this part is yours. You choose between Rafi and Kishore Kumar, but don't say no to this, please.
So let me also tell the entire audience that I'm very happy and delighted to share that today in this journey towards insurance for all, the entire ecosystem, be it insurers, be it distributors, be it agents, be it the service providers, people, everybody is with us wholeheartedly to, even if there are certain pain points, they keep it behind, and everybody is coming forward to join hands in this great vision for our people, for our citizens, for our countrymen, that everybody should have insurance. Nobody should die without a life insurance.
Absolutely.
No household should live without an health insurance. No, every enterprise should have a insurance solution for protection of its business and assets. So that is something we are dreaming for, and it will be a reality. So very soon we will meet up some evening and have a singing session. Thank you very much, Tamalda, and goodbye, and thank you very much.
No?
Some other day, we'll do it. Of course, we'll do that.